start it.
Ready?
Okay, 3, 2, 1.
Oh, fuck.
Good morning and welcome everyone to another edition of the Morning Brief. Now back in session regularly and scheduled. And we're going to kick it right off with a follow-up of the story we had yesterday about the Australian banks freezing the accounts of some of the customers who transfer money back and forth between different exchanges all around the world. And now we have this tweet by Aztec BTC, who reminded us that Westpac, which is one of the bigger Australian banks, they're also an investor in Coinbase. And he's sort of suggesting that they're doing this to drive people to Coinbase. And he is pondering whether to do a class action lawsuit.
Yeah, so this is hilarious because they're blocking deposits to Coinbase, and they invested $75 million in Coinbase. This would be hilarious if like Coinbase were planning to go into a completely different business or something like that. Yeah, I don't know what's going on. Like these banks. There's maybe some speculation to be had about whether the Australian government is kind of forcing these regulations upon these banks or something like that, or sent them some sort of threatening letter and they're doing this proactively or something. But yeah, this can't be good, for Australian people. That said, like I said yesterday, I think, there will be competitors that rise up, that there will be other solutions people will find, and they'll find a way to do it without necessarily using all these centralized entities.
Yeah. So, I mean, these are weird situations. People have to, I don't know. Sometimes I think that like the people in crypto, like a lot of these people, they've never actually had like a job at a big company. So they have absolutely no clue how things work. Like they actually think that Jamie Dimon, who is the CEO of a company with like what, 400,000 employees, knows exactly what's going on every minute of every day with JP Morgan. I mean, that's insane, right? In reality, right? So basically, a bank has an investment arm, and that's it. That investment arm has nothing to do with the bank services, the retail customers, or the regulation, right? The only thing the only regulation the retail arm has to, the only regulation the investment arm of that bank has to understand is it legal for them to invest in company X? If Coinbase is a legal company, if they think they can make money from investing in that company, oh, Jimmy, you mind muting, please? If they think they can make money in investing in that company, then they will do it. I mean, regardless of what the retail side has. And this is the same thing with like AXA investing in Blockstream. Like the investment division of AXA has absolutely nothing to do with the business itself of AXA or the fact that they're even like an insurance company. The investment arm has its own directives. It has its own, director. And for all you know, they just bought a bunch of Bitcoin and invested in Blockstream because their job is to make Bitcoin go up in value by keeping Bitcoin decentralized and secure. So I think it's funny when you see this, but in reality, like big companies, it's hard to coordinate all the departments. It really, really is.
Yeah, what Ton is saying is absolutely correct. Like, especially with the big financial conglomerates, the private equity arm or the asset management arm. I mean, they are subdivision, and basically all the top management gets to check: do they make money? Yes, no, okay, great. That's how basically the whole subprime mess also started, because the CEOs of the banks had no idea what was going on in those divisions, and they just
right. And it's interesting, like watch the movie The Big Short, where I think it was a Front Point or whichever like minor little like hedge fund that was part of Morgan Stanley that was like so short all of these mortgages. It turns out the the person, the company at the other end of those transactions was Morgan Stanley themselves. And they didn't even know that they were betting against the bank that pays them the paycheck, like inside the bank itself. Like they had no idea.
Yeah. That was that one hedge fund. They were independent, but they were within the framework of Morgan Stanley. Yeah.
Right. And I worked for one of those companies at Bear Stearns. We were independent, 80% owned by Bear Stearns. So we were doing like our own thing, but our paychecks said Bear Stearns. After the collapse, our paychecks just said JP Morgan. Like nothing changed for us because we were a profitable subsidiary.
Steve Eisman is the name, and everybody go watch The Big Short. It's very educational. It's very well researched. Read the book, even better. And so much for that. Let's see if something comes out of the lawsuit. We have another interesting one. We've been talking about BitPay, which is what's the affiliation? BitPay is owned by Bitcoin.com?
BitMain, I think, is a substantial investor. Yes.
Oh yeah.
Yeah. To me, BitPay is a wholly owned subsidiary of BitMain.
Okay. And well, this is sort of different because BitMain focuses on one thing or a couple within the Bitcoin space, and it doesn't. This is a sort of strategic investment. It's not a financial investment. What Tone talked about just now were financial investments, where the holding company often doesn't know what it's all about. But if BitMain invests in BitPay, it's for strategic operational reasons, and that's why there's more control and more direction. And this is probably why they stopped using the BIP71 standard, which Jimmy wants to comment on.
Essentially what BitPay is doing is, instead of using BIP21, which is sort of like the well-known QR code that you see everywhere, they want to substitute that with BIP70. Now, BIP70 has been around a pretty long time, but not many people have adopted it, largely because, well, it's hard to set up, and it's not really, it doesn't, like, it has some interesting features, like you can have like refunds and stuff like that because you have to encode that into your payment code or whatever. But the thing is, it's not very it's difficult, and it's frankly not that easy to implement, and it's bad for a lot of these reasons. And this is something that Samurai Wallet is pointing out, is that, hey, you know what, like, you have to use like the legacy public key infrastructure. This is like using like X509 and all these other things in order to use BIP70, and this is like sort of like going into the legacy stuff. We don't like it, and most wallets don't support BIP70, so why are you doing it? And that's sort of been the question. And frankly, I'm not sure what they're thinking, other than like maybe they want more AML KYC compliance or something like that, or they're being told by some government entity that you need to collect customer information whenever you take payments. Yeah.
Hey, Jimmy, how does BIP70? Oh wait, was that the BIP70 that Netkey wanted, and what do you call it? Bread Wallet was also in support of, and then Peter Todd went out against it. I remember the debate over BIP70.
I don't remember who debated it when. It's been a long time. I mean, it's been around for a long time. But yeah.
How does it increase know your customer, and how does it remove fungibility from
so you have to sign with like not like a Bitcoin public key. You have to sign with some other like X509 or some other public key thing, and that sort of increases, like if you sign with one of those, then you're known by some other thing, and I forget exactly the details of it, but it does have more sort of identifiability. And here's James Hilliard basically commenting on exactly this issue on the Bitcoin devs mailing list. And he says, BIP70 requires large, complex PKI dependencies such as X509 and...
Oh, can you move? You mind moving our cameras? Me and you block.
Yeah, let me, whoops. I think I moved the wrong thing. Yeah, there we go. And I will move myself here. All right. There.
Perfect.
Yeah, so you have BIP70 requires like X509 and TLS, usually via OpenSSL. That's what you have to kind of sign with there. And he's proposing something that will more or less make every BIP70 payment request into like a BIP21. And it's like basically sort of like a bridge so that you don't have to bother with wallets don't have to bother with this.
James Hilliard is starting to get a reputation for just I can just convert one into the other. Like no one else seems to want to do it. Right?
That does seem to be his personality. So it's interesting, and we'll see how this will shake out. But certainly something worth watching. It's the perception anyway is that BitPay is sort of bullying people or wallet developers into doing whatever they want, and they are one of the bigger payment processors. That said, sorry, it does seem like BitPay is maybe not going to get as much business going forward. So yeah, we'll see.
Okay, let's move on. Some more positive news. LocalBitcoin finally implemented Segwit. We've been talking about that for quite a while. And that people are complaining that the Bitcoin network is slow, and yet they don't use Segwit, which at least increases the speed a little bit and reduces the fees. Now, LocalBitcoins has done it.
Yeah, so they implemented Segwit. They're now Segwit compatible. I believe that means that the receiving addresses start with a 3. So they're using pay to script hash, pay to witness pub key hash. At some point, I'm hoping that they really support BIP32 addresses, so it's native Segwit, so we save even more space on the blockchain. But not that many wallets supported. Again, it's like herding cats a lot of times, like when you have like things like this. And this speaks to kind of why BitPay probably went over to BIP70. They want BIP70, so they're not going to support the legacy BIP21 thing, which is what every wallet already uses. So this kind of what happens when it's decentralized. You try to move people over, nobody really wants to, and so you try to force your hand, and then you lose business. So it's how markets are supposed to work.
Hey Jimmy. So two questions here, right? So I'm also on the I'm also using Segwit addresses that start with a 3. What wallets do support like BIP32 so that I can start? I think it's BTC1. What does that start
BC1.
BC1. BC1. They start with BC1, right? Which wallets have that? Does the core wallet have that?
I mean, they will. I don't think it has it right now. I think the only one that I know of that has native BIP32 addresses are Electrum and I think it's right now just Electrum. There might be more. I don't know if viewers watch it.
Green Address. I should update my Green Address app, but Green Address doesn't, as far as I know. I don't think Samurai has it yet either. So I'm waiting for my core node. I have to update my node next time I'm at my cabin. Probably won't happen for another month or two. But but hopefully we'll start going to that, because that's the one that's really. There's still an advantage to go into a segment with 3, right?
But it's like 17. No, not 17. It's something like 20-something bytes shorter per transaction if you spend from a native BIP32.
Okay.
So hopefully we see that.
Right, and people have to realize how much cheaper that is, right? Again, you're paying in Satoshis per byte, right? And lately we've been paying over 100 Satoshis per byte. So if you're saving what, 20, 30 bytes on a transaction?
Yeah, I mean that's actually something.
Right.
Yeah.
And that's per input, right? Or is
Per
that
input.
cumulative? Per input, right? So that means that if you had, let's say, 10 transactions coming into your wallet at 0.1 Bitcoin, and now you want to move that 1 Bitcoin, that's 10 inputs. So you would save, 20 plus kilobytes per input. That's 20 kilobytes times 10. That's 200 kilobytes at a value of 100 plus Satoshis.
It's not 200
byte.
kilobytes. It's just 200 bytes. But yeah.
Sorry, 200 bytes. My bad. At a price of 200 Satoshis per byte, I mean, that's a significant saving.
And I mean, this is why I'm excited about Schnorr signatures and maybe signature aggregation. You may be able to sign all 10 with like a single 32 byte thing. This is what bulletproofs were all about, and that would be super exciting if you have 32 bytes for all your signatures instead of like lots and lots of them. That would be amazing. Yeah.
Okay, so good news from LocalBitcoins. Let's move to China. And this is a sort of bigger theme that has been with Bitcoin for a long time. And the headline here is that the Chinese regime is preventing people from withdrawing more than $15,000 per year with their debit cards when they are abroad. Why does this matter? Because the Chinese people, they have about, let's just put it simply, 40 trillion in savings in the banking system. Of course, there's some companies as well, but it's a lot of money. They save a lot, but they're not allowed to legally buy a lot of foreign assets. So it's not like I can invest, I can buy a house in Germany or I can buy one in the United States. The Chinese, they can't do that. So they need to game the rules. They previously did that by having multiple cards, multiple accounts, and withdrawing a lot of cash. Or they used to buy a lot of insurance policies, life insurance policies in Hong Kong with their cards. And the whole rationale behind it is they want to diversify their holdings. They don't want to have everything in the Chinese banking system, which is over-levered and suffers from a lot of bad debts. And so they've been trying to get their money out, which is part of the reasons why the Chinese foreign exchange reserves went down $1 trillion from 4 to 3 over the last few years. And just to put things in perspective, so if we take the banking system $40 trillion and we just take 10% of that money, which is not really that much, and people want to get it out, that's $4 trillion, which would wipe out the foreign exchange reserves. That's why China is so anxious to control these flows. And that's why some people speculate they clamped down on Bitcoin, because many people were using Bitcoin to buy it on a Chinese exchange absolutely legally. And once you've done that and you move it to hardware storage, it's out of the banking system and you are diversified. So that's why many people say that was a reason why China actually banned Bitcoin trading.
I find this story consistent with what China's been doing for most of this year. Obviously, they basically shut down all their exchanges, and there were rumors that they were shutting down mining operations, which they didn't do. But yeah, this is a way that like authoritarian governments operate. All right, like they put big capital controls on. They say, hey, like you can't do X, Y, or Z. But that said, what I'm hearing in China is there are these like giant Telegram groups where people are trading directly with each other. When you kick out all the exchanges, when you kick out like local or ban LocalBitcoins for operating there, guess what's going to happen? People are going to go underground and still trade the same thing anyway. So they're able to get it out, and this is going to continue to happen. And we'll see how authoritarian they can be, when people have tools like Telegram and WeChat and all these other things that allow them to trade peer to peer.
Ton.
Well, again, this is one of those double-edged sword things. I mean, this is bad for the Chinese people because they're being restricted on using the money. This is great for people with Bitcoin because they're going to use Bitcoin. It's also been suspected for a while that one of the another reason why there's so much mining going on in China is because that's a way to avoid capital controls. You take a bunch of your money, you buy a bunch of mining equipment within China, and you convert that into Bitcoin from mining from it, even if you take a loss on it. I mean, it's a great way to get around capital controls.
Talking about taking losses, and this is really how desperate the Chinese are, that's what they've been doing with so many transactions, which is why they don't mind paying up for exorbitant amounts for New York real estate. That the Chinese will pay any price to get their money out of the country, or Vancouver real estate. And like Tone said, Bitcoin, one of the avenues. Also, the big one is the $50,000 that they are allowed to transfer legally within the banking system. And there, one of the methods is they use, again, different people. If one person wants to get 500K out, then they just get 10 people who don't have 500K and distribute it amongst the bank accounts, and then they transfer it on. And this is how they've been buying New York real estate, stocks, et cetera, et cetera. But again, it's a drop in the ocean. We're talking about a few hundred billions every year, whereas the potential is at least 4 trillion, 5 trillion. And the more people figure out how to use Bitcoin to do that, the more positive for the price it's going to be.
Indeed.
Okay, then let's move on to our next pseudo-communist fascist regime, which is Russia, where Vladimir Putin reportedly, according to the Financial Times, is thinking about developing a crypto rubbish, or actually a crypto ruble, and to avoid Western sanctions. So he's in a little bit in the same boat as the Chinese people, where they want to avoid the sanction of the government. Vladimir Putin wants to avoid the sanction of the Western governments. So everybody wants to avoid some sort of sanction. Jimmy, how does that play out?
I mean, that's interesting that that's the angle that he's saying is we need the crypto ruble in order to avoid sanctions on our country. What I would say is they're probably using the crypto ruble because they want to eliminate cash and know what the heck you're doing. I've said this before. You can use the technology we have in Bitcoin for good or for evil. And you can use it for good, like Bitcoin is. You know, it's decentralized. People can transact without the permission of a third party. You can also use it for evil. You can have basically a central party involved in every transaction. At least right now with cash in Russia, you can go and buy something and nobody has to know about it. With the crypto ruble, however, if you have a central party that issues all of these tokens, and this is also why, like, you know, I'm not a fan of Ripple at all, because it's a centralized party that can know whatever. If they have the crypto ruble, then they can basically stop any transaction they don't like, or you know say, hey, you know what, like, let's take away this person's crypto rubles because they are doing something that we don't like. And I think that's the real like sort of dream of the crypto ruble or any of these national cryptocurrencies, is really more authoritarian control of the population, and transactions, and making sure people don't dodge taxes or whatever. And that's more or less what I think what they're going for. What will happen with that? I don't really know. I have suspect that they've been working on it already, but they're having trouble sort of getting it out, but who knows?
So just as a backdrop before we go to Tone, why does Putin think, I mean, Jimmy obviously thinks that that's because of nefarious motives, but there is truth to it, that if you develop your own payments system, which is outside the main banking payment system, which is the SWIFT network, the SWIFT messaging system controlled by mostly Western companies in Brussels. And if you shut out of that, then you're out of luck, which is why Russia and China, they've always tried to develop their own legacy systems. And now they want to try it with the crypto system, because yes, if they get it off the ground and if enough counterparties accept it, then they won't be dependent on those few people in Brussels anymore. But Tone, can you comment? I don't understand why every time Vladimir Putin says something about crypto, Ethereum has to rally?
Oh, that's because Vitalik is going to be the one programming the crypto for Putin. I have been saying for 3 years that Vitalik has absolutely zero understanding of what the word privacy means. Vitalik is all about centralization. Vitalik doesn't understand. I had this argument with Vitalik in the group chats, like back in 2014, I think, where Vitalik thinks that he just thinks that everything should be like open, and that the government will just expose themselves and not close it down for themselves, but everybody will be visible. He has a complete backwards-ass view on privacy, which is why anything Vitalik has ever built, I knew was not going to work out, and it was going to be a complete disaster. So Vitalik is looking to exit Ethereum. Those have been the rumors over the last couple of weeks. And I mean, that's the thing, right? I mean, I don't think Vitalik is going to be working on anything for the Russian government, but people seem to think that he will. And I personally don't. So it's just another token. Like, look, the governments have a digital token. I mean, the dollar is 90%, 95, 98% digital. The ruble is like 98% digital. Well, like nothing changes, like nothing. They'll update their database. They'll come up with a brand new, token for their government. It doesn't change the way it functions. It's a government centralized currency. That's all it is. I mean, we do these stories all the time with all of these governments. Cash is going to be eliminated, and it's going to be the greatest thing for Bitcoin in the history of humanity, because when cash is actually eliminated, all we'll have is Bitcoin with Lightning, because none of these other tokens will ever scale. It doesn't work that way.
So interesting developments from that front. Tone, we see where it goes. Tone, do you want to talk about Jimmy wants to talk. Jimmy's addicted to the mempool. He watches that chart. When Tone watches the price chart.
Yeah. So I want to make this a regular feature. Here's today's transaction weather report. So here's what's going on. We did get like a huge eating of a very large portion of the 50 to 70 Satoshi per byte transactions over here. This little bump is because basically the mempool was more or less full at 500 megabytes. If you do like BTC large mempool, I don't think you'll see the same bump. There's no same bump there. Well, maybe a slight bump right over here. Right here, there's like a tiny little bump. So that might be mostly spam. That's like on the 0 to 1 or 1 to 2 Satoshi per byte range. You don't need to worry too much about that because you're not going to pay that little. You're looking at something like 30 to 50 if you want to get it in today, possibly. 50 looks like a good number, 50 Satoshi per byte, if you need to do some transactions today.
Great news. Let's talk about your charts, Tom.
All right, let's head over to the price. Let me grab my screen share. You guys will have to drop yours. Here we go. All right, let me slide this over. All right. So again, the week is starting off on a little rough patch, but look, the price is contracting. Like the weekly chart isn't very useful at the moment, so we go directly to the daily chart, where we continue to run this symmetric triangle into a point getting ready for a breakout. Now, of course, price can continue to stay in this $13,000 range indefinitely, but I think that we are going to break out or break down. Now, a couple of things here. The more times the 50-day moving average has to play support and bounce the price, the weaker it becomes. So the probability of a breakdown continues to increase the more times we touch the 50-day moving average. This symmetric triangle is also happening at the top of the range, and And now I still think that there's a good chance of a breakout. So the one thing I want to mention is I believe that Bitcoin futures started around the very high of the price. And I don't think that the futures is what's bringing down the price of Bitcoin. I think that the price of Bitcoin went up so much over the hype of the launch of the futures that we're now coming back, into a reasonable range. So that's pretty much how I see it. We will need a lot more time and a lot more data in order to see if the futures had a lot to do with it or not. Okay. So we just wait. I mean, this is complete no trade zone to me. You buy the breakout and you sell the breakdown, and you're now getting stuck between these two Fibonacci lines. So it's becoming very clear where your no trade zone is. It's basically between 14.5 and 12.5. So you have this $2,000 no trade range. I know it's pretty wide, but that's what we're dealing with, right? The 4 hour. Let me delete these lines because A, they're starting to confuse people, and B, they're starting to clutter my chart. The 4 hour, unless you're actually trading and timing these nines, the 4 hour has not been very helpful. It's been, whipsawing you up and down. But again, we have these setup trend lines that are now contracting. We have this one, again, at around 14.8, and this one at around 12.1. It's actually even wider than the current triangle and Fibonacci lines. Now, so we just wait. We just, wait for something to develop. Let it give you a direction. Here's the hourly chart. The hourly is giving us a 9. It's not a perfected 9 based on the color of the arrow. That was also not a perfected 9. So it's not as strong of a symbol. But yeah, so we wait. I mean, it's telling us that, we got on the hourly, got a little too high, time to take a little break. But again, everything is consolidating. There's really not much here at the moment. So we just wait, wait for traders to come back. I think the volume should be down. I need to refresh this chart. I ran out of short-term memory. You can see it right there in my little error in the indicator. There we go. I mean, that's about it. There's really not much. Take a break, wait for something to develop. All right, back to you guys, I guess. There's really not much on the price. I mean, there's nothing there, there's nothing there.
So Bitcoin is taking some time off. We thought it would never happen. So you guys, if you're still on vacation, enjoy the quiet time. We'll be back tomorrow, same time, 10 a.m. Eastern.
This song is done.